for the hour, Lloyd Financial Group President and CEO, Luke Lloyd. Welcome to you, sir.
Hey, guys. Glad to be out here during Thanksgiving week.
You bet. Glad to have you. Talk to me about this. This is the debate. Okay. Are you convinced that the affordability crisis right now is as bad as it's being portrayed, or are people feeling exactly what the reality is right now?
No, I mean, it's definitely the reality that unaffordability has been here for a while, and people are unhappy with it. I mean, prices don't come down. Okay, you don't want prices to come down because that's actually deflationary, right? So that means we're in a depression. So of course we've done the damage the past.
But you could have some prices come down. You could have gas prices could come down. You could have selected areas, right?
That's exactly
Housing prices maybe could reverse.
But what you really need is wages to keep up, or you need wages to increase to keep up with the unaffordability or housing or the cost of groceries. And if you look at PPI, kind of some of the numbers this morning, it kind of came in a little bit weaker than expected. And frankly, I think we're setting up for a very interesting 2026, where you actually have inflation beat. I think we'll probably end the year next year 2.5%. I think inflation is beat. I think you also have economic growth. And usually economic growth kind of stems maybe some inflationary pressure because you're growing, right? But with a big, beautiful bill, I'm talking with a lot of small business owners right now, clients, as we prepare for 2026. And with a big, beautiful bill with 100% bonus depreciation, with other things within R&D, research and experimental that you can deduct real quickly. All of that is actually setting up for a growth story for a lot of these small businesses. And I talk with these small businesses, it's the same story that the Federal Reserve is saying. They're less concerned about economic growth. They're more worried about the job market in a lot of ways. The job market is what we have to really pay attention to and be worried about.
In the 3-month period ending in October, real median income growth was 1.6% on average.
Yep.
And that is just not making anybody feel good. And it shows up in the consumer confidence numbers this morning.
And that stems from actually, I think, the government shutdown in a lot of ways. Because you said that was an October number, right?
And ending in October.
Well, I have a very interesting statistic. It's a little stale now because the market's recovered a little bit the past few days. But if you look at GDP, the hit this year was -1%, or projected to be -1% in the government shutdown. Right. 2018 to 2019, it was -0.3%. If you look throughout history, the stock market correction on a -1% contraction, or at least reduction in GDP, correlates to 5 to 8% of market top to bottom decline. Where was the NASDAQ last week? -8%. So I think a lot of this is priced in. I think the liquidity is coming back in the system, which is going to set up a stellar, I think, beginning to 2020.
But to that point, the sanctuary and helping take
I don't pardon turkeys. I eat turkeys, specifically actually with hot sauce. Maybe even Taco Bell hot sauce because I'm obsessed
Luke. See,
with Taco
I knew
Bell.
Luke had my back.
Well, this has been a wide-ranging A block, and I hope you enjoyed that. Now we want to hear from you.
So, Luke, to Taylor's point in the A block, and we were talking about it a lot yesterday, is this market going to get its 25 beeps or not?
Yes.
Okay.
Yeah, I was also wrong last year about the jumbo cut, so take it with a grain of salt. But
fair.
Look, I do think we're going to get the 25 basis point cut. What really matters is 2026 expectations. So, look, these things change a lot. Last year, around December 2024, we were talking about 2 Fed rate cuts. We're probably going to end up getting 3, like I mentioned. I think this will be the third 25 basis point. But everything is looking at, like I said, talking about strong economic growth. But the worst and the thing we need to pay attention to the most, and they're talking about it a lot more, is the jobs market. And I brought it up before on your show that the AI infrastructure, the AI implementation, that's going to take jobs into 2026. And AI is actually going to help at the margin with all these corporations. Every stock is this tech stock now. It's not just the Mag 7. You're seeing rotation out of the Mag 7 to other names. So my point is with that is, if every company is a tech stock now and using AI, their margins can improve, they can lay off workers, the economy can actually not be too strong, but the actual profitability of these companies can actually remain pretty strong and stocks can do well. So look, we talked before, about tech. I'm staying away from NVIDIA. I'm staying away from Palantir. I think there's a changing of the guard happening at the top too, with Gemini and Google, with NVIDIA, the news today. So I think there's that market rotation to the equal weight that I've talked about before. Specifically, I know we talked about the Dow Jones Industrial Average. I'm talking about DOW, manufacturing firms, even with a big, beautiful bill that have the depreciation bonus now, 100% bonus depreciation, and also the R&D expensing. I think that's where you want to pay attention to from investing allocation.
This is really interesting, and I just like the way you put that so simply, that what could be good news for the markets, which is the AI productivity, earnings continue to do really well. The market gets its rate cuts, which tends to prop it up a little bit. all while the underlying fundamentals, however, weaken, Taylor. And
Something that we just talked about in the last segment is the number one issue for consumers. Doesn't the Fed need stable and low prices before they think about the labor market? When we talk about the balance of risks, a lot of people have thought the labor market has to be front and center much more so than inflation. But if inflation is what is the pain point for consumers right now, ought that not to be the bigger focus? I don't know.
I would say no, Taylor.
Yeah, okay.
And just to kind of have this open debate, and the reason being is that does the Federal Reserve talk about AI? Do they even talk about it? They kind of just, every time the AI is brought up in a question, they kind of just throw it to the side. So if affordability is an issue, losing your job is a bigger issue, right? Because you can't obviously afford anything if you lose your job. So I think that job market, and again, I know they don't talk about it, but if my thesis is that AI is going to replace jobs, that's much more disinflationary than anything else.
But couldn't you argue inflation hurts all of us, where losing your job hurts only the people who lose their job? Not to discount that.
Yes, you can. But I also agree with Luke in that if people lose their jobs, then they can't consume. The consumer's 2/3 of the economy.
Late on jobs. Thank you.
And I think this is an opportunity for small business to catch up, though, because all the large corporations took all the jobs for the past 5 years. So small business, small caps in the S&P 500, if the job market is struggling in a lot of ways, it's a way for these small businesses to take some of the big employers that may be laying them off. So yeah, I think it's actually, again, this bifurcated economy that we go into.
In the short run, and the borrowers in the investment grade market.
I did a quick write-up in my newsletter about how, and I want to be very clear here, I'm not talking about the high flyers like NVIDIA, but as a general way of speaking over the next few years, I think that the equity markets are safer than the bond markets in a lot of ways because of the wealth divide and separation, because of the liquidity in the system. We didn't even talk about quantitative tightening ending December 1st. That's more liquidity coming back into the system from the Federal Reserve, right? So this wealth separation is continuing.
Not exist if Joe Biden and Kamala Harris had won.
That's exactly right. And you just hit the nail on the head about national security. Look at the internet back in their late 90s, mid 90s, early 2000s. The internet was not national security. The car, the wheel, all these technologies, had nothing to do with national security. This time is different. AI absolutely has everything to do with national security. And once it has that mentality attached to it, you can't pull back spending. And it is correct in that it is national security because you need AI, this brain, to be able to think for itself probably eventually in a lot of ways, aid your economy, aid your national defense in a lot of ways. So yeah, the spending is not going away. This is going to increase the liquidity. I brought up the stat earlier about the 8% correction in top to bottom with a negative 1% GDP decline because of the government shutdown. You have quantitative tightening ending. So all this liquidity again into the system, we actually just added on the dip the past week or so. We added a lot of beta stocks. So we added OWL, TTWO. Yesterday we actually bought Oracle. We wish we would have bought maybe pulled the trigger this morning with a little bit of a decline this morning, but we bought Oracle actually this morning as well to add beta to our portfolio on this decline because of the liquidity spigot.
You said that AI spending shouldn't stop, right? Or it won't stop.
Right.
And I would argue it can't stop either.
There seems to be some interesting stuff. Let's talk about Google today. Google's a stock we own. That's one of the only Mag 7 stocks we own. We have a very small weighting in Microsoft. And we have about a 3% weighting in Google. All the other ones we don't touch. But Google, Meta did news this morning about them using Google chips. Maybe NVIDIA didn't have as much of a lead as everyone thought. Maybe Google was kind of stepping on.
You know what? This Google.
That was a really good take. I love that a lot, actually. But I will say the data Google has is astounding. How much data Google has compared to the other Mag 7 stocks. NVIDIA obviously can't touch Google's data even close to coming to that.
Which is taken from all of you. Which it is.
Yeah, give you a badge.
I have two things here. One, don't clap when the plane lands, okay?
Fair.
Number two, don't stand up right away when the plane pulls into the port. We're all going to be sitting around for another probably 15.
Port, it's not a ship.
Okay, well,
Gate.
a gate. I'm sorry.
And if you got, you know what? If the